This is our Forex blog for September 28th, 2012. And like we do most days, we use our currency meter as the first step of our three-step Forex trading system to find the strongest currencies to buy and the weakest ones to sell. You want to sort this from strongest to weak, and then simply, here you go. I have it scrolled over to the previous day. Let me scroll this over to today. Once you have a sorter, you can see the dollars very strong, the CAD, real-time trend strong, 15 hourly, daily trend shifts up at 10. In the CAD's case, the weekly and monthly trend are down. The dollar's case, the monthly trend's very strongly still down. The weekly trend pretty much shifted up around 4 and got stronger during the U.S. session. The Australian is weak on all time frames. And one of the easiest patterns to find, my personal favorite as far as using the currency meter, is spotting incredible intensity to the downside, especially when it lines up on pretty much all time frames. And then when you see 15 minutes to, in this case, about 25-30 minutes worth of strength, this is a counter trend move, but it has visually about half or less the strength that the previous weakness had. And when you see the strength come in there very lightly and then fall off, basically you use the currency meter to anticipate a future trend move. So let's scroll these back and look at it at that particular time to see if we can see the exact opposite pattern. And each of these bars is for 5 minutes. So as I scroll forward, that's 5 minutes, 10, 15, 20 to 30 minutes is a decent pullback. At this point, I want to find a currency that's pretty strong on all time frames, and at that particular time, the euro was strong on all time frames. The dollar was as well. It had 2.5 hours, a lot of strength, a little bit of weakness, hour of strength, about a half an hour of weakness. The 15-minute hourly trend, that along with the Swiss were two of the stronger ones. So it would make sense to anticipate right around 9, and it might take another 5 minutes to an hour before the move actually happens. But you're looking at the chart around 9, the Australian dollar, for sells, because you have a weak Australian and strong dollar. So here's 9. This one you can see was going down, had a pullback, going down. It's near the lower containment band. It's near a Fibonacci retracement level. So it's probably not likely to go underneath 0400 because it's below the lower band. But at 9 o'clock, we're basically kind of just visually looking for a trend line break. And you can draw these on your chart or kind of eyeball them, or you can also use a digital signal processing based displaced moving average. So if you go down to our moving average, put in 5 periods, shift to 2 bars to the right, and it's very critical that you click on DSP and wait for, because you want to make sure, the pull, especially the more down it goes, the deeper up it has to go. Since this was really the first wave of the down move, you can see it went above the displaced moving average 1, 2, 3, 4, 5, 6 bars, and then pulled back. I like to look for 6 to 10 pullback, 6 to 10 bar pullback that's above the moving average, and when it finally breaks there, you can go short. So in this case, we got 1, 2, 3, 4, 5, 6. At that point, you can start looking for some sells. Notice in real time, at that particular time, the Australian's pretty strong, the dollar's weak. Here's the first close bar down after you having somewhere between a 6 and 10 bar pullback. And you want to go short when it goes 1 pip underneath that bar, and you want to put your stop 1 or 2 pips above that bar's high. So your risk is very small, and even if it goes right back down to the low down here at 0406, you're shorting it right around 20. You have a good chance of making 14 pips while risking 5, 6, or 7 pips. And so therefore, if that trade just goes down and stalls at the low, you made 2 times more profit than what you risked. That's the key to trading. High winning percentages is wonderful, and there's days where the market just keeps going and going and going, and there's days where trend trades work, counter trend trades work, pretty much all the methods work, and then there's other days where you have a lower winning percentage. But if you focus on trades that are likely to give you 1.5 to 2 times bigger profits if right than what you're going to lose if wrong, that's what you want to do. So if this breaks down here, usually I want to wait for a confirmed break of the moving average. In this case, it didn't break. At this point, it does look like it. So I'd be short right here around 21. My stop above the high. If it goes my way, great. I'm moving my stop to break even. Sometimes they start to go your way and then they come back against you. Don't stop you out and then come down again. When that happens, you want to move your stop to break even. So this one kind of went away a little bit, came back. I'm moving my stop in half now. My risk is going to be about 4 or 5 pips. I'm not going to put it right at break even because it hasn't moved enough yet, but this started to show some weakness. I want the next bar or two to pop up to the 80 level, and that shows me there's significant intensity of the downside. All right, that's good. Now it's kind of slowing down here. This is yesterday's point of control, which means this is the area where most traders had positions yesterday. It's going to be a key support area, and it was before. It may be again now. The fact that we have a lot of weakness here is wonderful, but if it kind of goes sideways here, I'm going to try to exit half my trade and lock in 6, 7 pips. All right, it broke that level. It's good. It got a little bit weaker, as you see here. It could stall at the low. Double bottoms and double tops happen almost every day in almost every currency most days. All right, it broke it. Now the next support area is right here at 02. The whole number is right there. A lot of times it stalls there. I'm going to watch this area. It broke through there without even stalling. That's wonderful news for a trade. But a lot of times it goes through it by 3 to 5 pips and then comes back above it, and typically that's when I exit my trade. If it kind of stalls here at this 20-day moving average at 0396, I might exit half my trade there. And it does. So I'm going to get out of half my trade there. I'm going to put my stop pretty much a few pips above this bar's high. Sometimes it just kind of goes sideways and then it continues down. It's still extremely weak. All right. Now again, it's below the lower containment band, so statistically, it's likely to kind of stall out there. I want to draw my fibs on this chart, especially on the last wave, to get an idea of where to get out of this trade. The first fib target's right here. Most of the time, price doesn't go underneath the second fib target, so that's around 89. It's only got another 4 pips to go, so I'm going to watch this like a hawk. Any signs of slowing, I'm going to get out of the second half of this trade. All right, so I'm out of that second half at 96. And you can see it went down a little bit farther and then pull back. Typically underneath there, you're going to get a reversal. If you want to use our digital signal processing base moving average to get out, you would have got out down here at 88 versus my 94, 95 here and made more money in that case. Some cases, getting out at fib targets or when it stalls, captures 1 to 5 pips more. Every trade's different. But that's how you use our currency meter to anticipate a trade. And if you put our displaced moving average on here, you can just simply count 6 to 10 bars above that moving average. It's relatively safe when you have an extremely weak currency to trade. So you got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Breaks it. Pretty high probability trade. It did close down, and then the next bar went up, so we had the chance of getting stopped out. It started going down. We're yanking our stop down. And if you were shorting at 90 and you got out at 95, or 20 and 95, you made 25 pips on there while risking 7 pips. And so you don't have to have a super high win rate when your wins are 2, 3, sometimes 4 or 5 times bigger than your losses. Let's go look for some other trades using the currency meter. And again, the perfect trade is when all the time frames are down and you have extreme weakness followed by very little amount of strength. Let's see if let's look for some earlier ones today. And then sometimes you're not going to get all the time frames lining up. You can see the weekly trend of the euro is down, the daily trend's up, the monthly trend's up, hourly trend's up, the 15-minute trend goes up here. So let's scroll forward and kind of see. Just a little bit of weakness right there, a little bit of strength coming back in. This would be, it could go strong or weak at this time. Most of the time frame trends are up. Here it's showing a little bit of weakness. All right, 1 bar. All right, so on this bar right here, after basically going sideways with a little bit of weakness, strength comes back up at 6. Which one would you want to trade against that super strong euro? And you had the same exact pattern here with the Swiss. Lots of strength, 15 minutes of very little weakness, the strength came back. You can certainly have traded the Swiss too. Let's look at the pound. It's weak on most time frames. The euro pound is going to be a good one to be buying, coming up to 6. One's weak on all time frames, the other one's strong. 6 o'clock right here. Notice, we're looking for a pullback. You can see it went up, went up, went up. Another one to trade the pound against would be the Swiss. So we're looking to sell the pound Swiss because the pound's on top in this one at 6 o'clock. All right, pulled back. You can see it went down, down. And this is a 5-minute chart, by the way. I prefer range charts because they're much less noisy. So let's put a 5R chart on here. And you can see coming up to 6, you have a very weak currency. Kind of goes up and goes sideways. A lot of times when it breaks down, you're going to have a trade there. So you get short, immediately comes back up. I'm moving my stop up a little bit. I'm going to lose 5 or 6 pips. A lot of times this happens. You know, you get a pullback, kind of tries to go down, it pops up again, and then it runs out of steam. You know, you got to take the first trade because sometimes you'll miss 30, 50 pip moves if you don't take them. So you get back in again, comes down and goes sideways, barely broke that low, get out of the trade right here around, let's just say 51, you're short the second time at 63. So you make 12, 13 pips and you lost 7 on the first one. You know, not a big deal. A lot of times near the lows, you want to find a bigger pullback. If you just simply draw these trend lines or use the displaced moving average for your entry, you can see small loss win, small win, small win. And the longer it has, you would expect it to reverse to the upside. If it doesn't, you know, just simply draw trend lines underneath, you know, the bars. It's going sideways with low volatility. It breaks down right here. You can see that led to about a 20 pip drop. And then once it goes above the high here, it's a little bit less likely to reverse. That trade's a little bit riskier, but you can see it popped up again, came right back down. If you took a trade here and lost money, you got most of it back, and you got it all back on the second trade. And you can always, you know, kind of wait for this low here to get broken, because if it does break that low and resume its downtrend, it's probably going to go down to the low down here, which is about 30 pips away. Anybody who is smart is going to risk 10 pips to make 30. Wait for it to break that low. All right, so you're short. And anytime, like I said, it goes against you, or it goes your way, then it pops up against you, I'm going to move my stop, you know, right above this area here. And typically, you're going to get stopped out with a small loss. So you can see it eventually broke down and did go back down to the low down there. Now, as you watch this pound Swiss, sometimes currencies go back to being the previous trend, which in this case the pound is down and Swiss is up. You want to watch the real-time currency meter as you're looking and taking trades. As we scroll forward here, you'll probably find that the pound's weakness is no longer there, or there's just, you know, 15 minutes of it or so. After it looks like 10 o'clock, the pound gets really strong, and you can see that here, you know. So after, you know, if you see a couple hours of weakness, usually 2 to 3 hours of strength, 10:30, 11:30, 12:30. At 1:30, you can start looking for sells again. 2 to 3 hours is a good rule of thumb. So let's scroll forward to 1:30. The key to trading is always looking at where the swing levels are. If it can't break this level here where there was some selling before, it's a good chance it's not going to. So 1:30 right here, it didn't go back up to that high. A lot of times you'll have moves, pull back, it tries to go higher, it fails, can't get over this high, can't get over that high. Then you want to sell this low right here. All right, so you'd be short somewhere around 68 here. I would put my stop right above the high. And then you want to watch the currency meter as you go forward. Let's make this the same color so that as we go forward, we can see how the pound looks. If it doesn't resort back to extreme weakness here, you want to get out of the trade. And you can see it didn't. So odds are we're going to get stopped out of this. You know, if a lot of these stops are used arbitrarily, a pip or two above the high. If you're in this trade here and it doesn't look like, I mean, you know, don't get out of this trade with a 6 pip loss if by just waiting to see what happens here, there's a little bit of weakness. You know what I'm saying? Don't just take a 6 pip loss when it appears that you're probably going to get stopped out and then it goes down. Wait and see what happens. Now at this point, it should really be going down. I'm going to exit this in a bar or two. I tend to use a 20 or 30 minute time stop. If it doesn't go my way in 20 or 30 minutes and I don't see signs of it going my way, I tend to exit. Where is the Swiss? Yeah, here's the Swiss. So the Swiss has some weakness and the pound has some weakness. You know, it could resume its previous uptrend. It's certainly been in about an hour and a half since it had a lot of intense strength. At this point, it's either going to go down or I'm going to get stopped out. I'm willing to take a 5 pip loss now. It had plenty of time to go down. It should go down. And you can see we caught up to live prices right now. This is, you know, Friday, the dead time of Friday. It's probably not going to be a, you know, you really wouldn't want to take a trade after noon on Friday anyway, but I'm just trying to illustrate how you can manage your trade once you're in it using our currency meter. Let's look at the dollar here at 7. The previous trend was down, had a lot of strength, very little weakness, a lot of strength again. The hourly trend shifted up. At that time, we have about 30 minutes of just a little bit of weakness. And then some strength came back. So which currency, you know, is weak on most time frames? Well, the pound is. So at 8 o'clock, you could be looking for pound dollar sells. And one thing to notice is this is already down near our lower containment bands. It's very risky to sell down near the lower bands. This one has the colored bars on it versus the histogram. So myself personally, what I'll do is I'll draw fibs off this first move up and then kind of wait for it to get up between the first and second fib target a little bit later in time and sell it. I don't want to, that way if the trade works, I have a good chance of making 10, 20, 30 or more pips. And you know, it's right near the lower bands. It's not likely to go lower. Sometimes it does, but I'm going to kind of wait and see and hope it goes up. Now, if it does go sideways for 2 or 3 hours and doesn't pull back to these fib targets, guess what? It's probably going to go lower. After going sideways for at least an hour, hour and a half, I will then consider, you know, selling the breakdown here. I'd need another 4 or 5 bars sideways before it breaks down before I'd get in it. All right, so that was a 3 or 4 bars. You go short right here, put your stop over the bars high. And you want to see if you're using our colored bars instead of the histogram, you want to see these bars go dark red. And it looks like we're going to get stopped out. Not yet. Sometimes it goes close to getting you stopped out. When it comes back down again and doesn't break these lows, you've got to get out with a small profit or break even near down there. All right, so you get stopped out. Again, waiting for a fib target to get hit, you're going to have a lot higher winning rate. It's coming up to that level here. And you can see pretty much reverse down 10, 20, 30 pips. We also get a sell signal from our signals thing, FX trade signals. So it was basically about 2 pips away from that fib target. You're going to have a lot higher winning rate if you have the patience to draw your fibs and wait for either a fib target to get hit or a Fibonacci retracement level. I like the 38 to 50% ones. So this happened to be a fib cluster, which is a 38% retracement of the whole move down. Let me redraw that. 38% retracement of the whole wave down in the 1.382 fib target of this counter trend wave here. That's why this trade, you know, was such a high odds trade. You're definitely, if you have a small account, you're looking to have the highest winning percentage possible. You're going to do a lot better by drawing your fibs, trend lines, fib targets, and waiting for areas to get hit before, you know, taking the trade. And you don't have to watch it. Sometimes it takes 2 or 3 hours to get up to that level. Once you have your fibs where you think it's going to reverse at, draw a line a few pips underneath there, right click on it and say create alert, and you can have cell phone alerts, audio alerts, or even email alerts. You know, and you'll be notified. You can come back. You can see it got hit here. It took it about, you know, 5-6 minutes before it started to go down. You had plenty of time to get to the computer, pull the trigger, and you made 10, 20, 30. And as it's going down, the bars are red. It is down here near the lower band. Here's the previous day's low. And in this case, you know, it went down a little bit, considerably more. So if you use your fib target